Good morning, everybody. It's Friday, May 7th, 2010. Just going to run through the morning charts here of the gold and SP Mini. Anyways, here's the Kiko overlay chart. Yesterday we saw gold rocket higher as the market started to sell off, showing that they are true. Gold is the actual safe haven. Silver went pretty much sideways all day. Everybody probably thought that silver would rise with gold as a safe haven, but it pretty much tracked sideways all day. Actually, it only rallied near the end on the major sell-off just a bit, but pretty much it was a flat day for silver. But going back to gold, we saw a nice move up in gold. Near the end of the day, we started to get this choppy action here, indicating it's getting weak, it's overbought, and we saw it drift down through the night. And now it's coming through today pretty much through the middle of that noise, which is just above this support level and below this resistance level. So I think we're going to be trading within probably a fairly tight range today. I think we'd be trading somewhere between these lines here. So it's still a $20 range, but you can see right now it's just flatlining through the middle of it. So I don't think there's going to be too much exciting happening today. If anything, there's going to be profit taking in gold. We might see it pull down into this level as it kind of just bounces from support and resistance levels, and it'll test this kind of area today. So we'll see what happens. 1180 I think is pretty much key support. I'll show you on the intraday chart. Here's the intraday chart of gold. If we take a look at this chart, we've got the trend is moving up nicely. We've got a key pivot level anywhere from pretty much across here to somewhere in this range here, which is 1180. Same as the Kiko chart, and this goes back several days, so it's a pretty key level here. And this is where we broke through yesterday, and then we just saw prices rally higher. Pretty much hit the target that I pointed out earlier. I was thinking I was going to go to 1213 to 1215. I went to 1211, pretty close, and it's pulled back since. And let me just zoom in on the 60-minute chart. Okay, 60-minute chart, you can just see right now it's pulling back. It had the big run up, hit resistance level. I figured it was going to be 1113. Now we're just getting a drift back down, and we're going to see it probably test this support level, or possibly right through the heart here of this noise, which is a support level, as we had lots of price action above it and below it. So we're going to see a pullback to here, and we could get a deeper pullback all the way down to the 1180 area here. So that's what I'm thinking for gold. I don't see anything too exciting happening today. I think today's going to be a digestive day, but anything can happen, as we know from yesterday. If I jump to the daily chart of gold, we can see gold yesterday had a big pop, and it rallied up and it sold down. It's got this long upper wick is somewhat of a weak sign. It's usually because the candle's still closed above the halfway mark, it's still a bullish candle, and we might see price just kind of flag down or go sideways before another move up. But usually when you get long candles, whichever side the candle is on, so if it's a lower candle, it means the price is sold down and then buyers ramped it right back up. So it usually kind of points to a trend reversal. But because the trend is up so strong and the candle still closed above the halfway mark yesterday, all it's showing is it rallied up and then some profit taking came in, pulled it down. It's not a reversal candle by any means. It's just showing that we're most likely going to see some consolidation, some sideways action, maybe a small pull down into this support level here before it continues to move up. So that's what I'm thinking for gold. If I pull in the SP 500 chart here, this is the past 10 days or so. I just want to show more or less we are in a downtrend, and what we had this big sell-off, and now we're getting this bear flag. So if I just go back in time here, when we get these sell-offs, we tend to get these little bear flags. I'm just going to get the pencil out here. We get these bear flags, and a lot of times they will roll over and continue to go deeper, but it's a bit higher risk play. What I like to see is this longer drift back up into a key resistance level, and then we short in here with the stop placed above the previous high, and then we catch the waves down. And of course, once you get these sell downs, you get this little bear flag, and then hopefully you get this squeeze that pulls you up into a resistance level, and then you get the sell down. And yesterday there was someone that was so bearish with the news coming out that it didn't really rally back up to a resistance level. It just kind of kept fading, and then it just slid. So what we're seeing now is we've got the run down, and now we've got this bear flag. The question is it going to go test these lows or near the lows, or is it going to continue to work its way up here and then roll over? And of course, this big bar down here has really makes this move not look so there's a lot more risk here than what we think. You look at this candle, like we're talking 25, 50, 75, 100 point move here. So just jumping in here could really kill you. There's a 50 points move potential that it could drift up before it rolls over. So it's even though it looks like a good setup, there is a ton of risk here because this huge candle has really condensed, made the price action look small, but really these movements here are very big. If we see the S&P continue to drift its way up, it could go up another pretty much into this level right across here. It could go up 50 points. So that's a lot of risk for a potential 50-point down move. So I'm not too excited to do anything in here. There's a ton of risk involved. We're gonna have to play it by ear, and that's kind of what I'm thinking. So I know a bunch of you are probably excited today. Could be another sell-off, and you might want to short it, and it could be a very good play. There's kind of the channel that it's trading in. If it breaks below the channel, we could get another waterfall slide. You could jump in and chase it down, taking some money off. As soon as it starts to go in your favor, take some money off the table to quickly reduce your risk, because it can snap back extremely fast. A lot of times you get these shakes where it'll break down, everybody will short it, and if it pauses for a couple moments, then there's a good chance it's going to snap right back and rally up. And all it is shaking some people out for trying to catch this play. So I'd be very careful if you're shorting today. I don't really want to touch it unless I see something really good, and I'll update if I do see something. But that's kind of what I'm thinking today. We're talking 50-point risk doing anything in here. Not anything I want to touch. That's about it, really. I'll talk to you guys in the chat room. Bye bye.